A Brief Guide, Part 4, Indexed Universal Life Insurance. Today we drift through the world of Indexed Universal Life Insurance, or IUL for short, and introduce you to the powerful financial tool. It's essential to understand that IUL is a form of life insurance that also comes with a cash value component, offering some unique benefits that can be advantageous for your financial future. So let's dive into what it is and how it can be beneficial for you. 1. What is Indexed Universal Life Insurance, IUL? IUL is a type of permanent life insurance that provides coverage for your entire life if premiums are paid. Unlike term life insurance that only covers you for a specific term, IUL stays in force indefinitely, making it an excellent long-term financial planning tool. 2. Benefits of Indexed Universal Life Insurance. Death benefit. Just like any life insurance, an IUL policy pays out a death benefit to your beneficiaries upon your passing. This can provide financial protection to your loved ones in case of the unexpected. Cash value growth. Here's where IUL shines. Part of your premium payments goes into a cash value account, which grows over time. The growth is typically tied to a market index like the S&P 500, allowing for potential higher returns compared to traditional savings accounts. Tax advantages. IUL offers tax-deferred growth on the cash value. This means you won't pay taxes on the gains as they accumulate, allowing your money to compound faster. Flexibility. IUL policies often come with flexible premium payments, giving you the freedom to adjust your contributions according to your financial situation. Protection from market downturns. While your cash value growth is tied to an index, most IUL policies have a floor, protecting your cash value from market losses during downturns. 3. How to acquire or exchange current insurance policies for IUL. A. Assess your needs. Before making any decisions, it's crucial to determine your insurance needs and financial goals. Work with a financial advisor or life insurance professional to understand how IUL fits into your overall financial plan. B. Research insurance providers. Look for reputable insurance companies that offer IUL policies. Compare their terms, fees, and historical performance to find the one that best suits your needs. C. Understand policy illustrations. Insurance providers can provide policy illustrations that project how the policy might perform based on certain assumptions. Review these illustrations carefully to understand the potential growth and benefits of the policy. D. Medical underwriting. Applying for IUL usually involves medical underwriting, where the insurance company assesses your health to determine the premium rates. Be prepared to provide necessary medical information and undergo a medical examination if required. E. Evaluate existing policies for exchanges. If you already have life insurance policies, consult with your financial advisor to assess whether exchanging them for an IUL policy makes sense for your situation. There may be surrender charges or tax implications to consider. F. Complete the application. Once you've selected a suitable IUL policy, complete the application process. Ensure that you provide accurate information and review the terms and conditions before signing. G. Pay premiums. Once your application is approved, start paying premiums as agreed upon. Be consistent with your payments to keep the policy active and maximize its benefits. Individuals often leverage Indexed Universal Life Insurance, IUL, as part of their comprehensive financial strategy due to its unique benefits and potential tax advantages. Here are some examples of how people, especially the wealthy, use IUL policies. 1. Wealth accumulation and tax advantage growth. Wealthy individuals may use IUL as a tax-advantaged way to accumulate funds beyond their retirement accounts and traditional investment portfolios. The cash value growth in IUL is tax-deferred, meaning they can benefit from compounding gains without immediate tax obligations. Additionally, since IUL policies have no contribution limits like retirement accounts, high net worth individuals can contribute substantial sums, allowing for significant growth potential. 2. Estate planning and wealth transfer. IUL can be utilized as a part of estate planning to efficiently transfer wealth to beneficiaries. The death benefit paid to beneficiaries is generally income tax-free, ensuring that the heirs receive the full amount without any tax burden. Wealthy individuals can use IUL to provide for their loved ones, cover estate taxes, and ensure a smooth transfer of assets. 3. Supplemental retirement income. Some wealthy individuals use IUL as a supplemental income stream during retirement. They can access the cash value through policy loans or withdrawals, which may have favorable tax treatment compared to traditional retirement withdrawals, providing a tax-efficient income source. 4. Alternative to traditional investments. IUL offers an alternative investment vehicle for those who want to diversify their portfolio and protect against market volatility. It provides the potential for market-linked growth without the risk of directly investing in the stock market. 5. Business planning and key person insurance. Wealthy business owners often use IUL as part of their business planning strategies. It can be used to fund buy-sell agreements, protect against the loss of a key person, or accumulate funds for business expansion. Now, in terms of laws and IRS policies governing IUL. 1. Tax treatment. The tax benefits associated with IUL are governed by the Internal Revenue Code. Under current tax laws, the cash value growth in IUL policies is allowed to grow tax-deferred. Moreover, death benefits are generally income tax-free for beneficiaries. 2. Modified Endowment Contract, MEC. Rules. The IRS has established rules to prevent policyholders from funding life insurance policies excessively. If a policy violates these rules and becomes a modified endowment contract, MEC, the tax treatment may be impacted and certain tax advantages could be lost. The MEC rules determine the maximum premium that can be paid into an IUL policy based on the death benefit and premium payment history. 3. State insurance regulations. Insurance products, including IUL, are regulated at the state level in the United States. Each state has its own insurance department that oversees the sale and marketing of insurance policies within its jurisdiction. 4. Policy disclosures. Insurance companies are required to provide policyholders with detailed disclosures and illustrations that show how the policy may perform based on various scenarios and market conditions. This ensures transparency and helps policyholders make informed decisions. Please note that tax laws and regulations can change over time, so it's essential to consult with a qualified tax advisor or financial professional with the latest laws and policies before making any financial decisions involving indexed universal life insurance. A notable Internal Revenue Service code to be aware of is Section 7702. IRS. Section 7702 is a provision of the United States Internal Revenue Code that establishes the tax rules for life insurance policies. It specifically addresses the tax treatment of the cash value accumulation and death benefits of life insurance contracts, including indexed universal life, IUL policies. Understanding Section 7702 is important for policyholders and insurance professionals to ensure compliance with the tax regulations and take advantage of the associated benefits. Here's an overview of Section 7702 and its benefits. 1. Tax-deferred growth. One of the primary benefits of Section 7702 is that the cash value growth within a life insurance policy, such as an IUL policy, is generally tax-deferred. This means that policyholders do not have to pay income taxes on the growth of the cash value if it remains within the policy. This tax deferral allows the cash value to accumulate and compound over time, potentially resulting in faster growth. 2. Income tax-free death benefit. Section 7702 establishes that the death benefit proceeds paid to the beneficiaries upon the death of the insured are generally income tax-free. This provides a significant advantage as it allows the beneficiaries to receive the full death benefit amount without any tax liability. 3. Favorable policy loans. Policyholders may access the accumulated cash value through policy loans, which can be advantageous due to the tax treatment outlined in Section 7702. Policy loans are generally not considered taxable income, even if they are not paid back during the insured's lifetime. However, if the policy lapses or is surrendered, any outstanding loans may be subject to taxation. 4. 1035 exchanges. Section 7702 also permits tax-free exchanges of one life insurance policy for another under Section 1035 of the Internal Revenue Code. This means that policyholders can potentially exchange an existing life insurance policy, such as a traditional whole life policy, for an IUL policy without triggering a taxable event. 5. Premium flexibility. Section 7702 sets certain requirements for the premiums paid into a life insurance policy to maintain its favorable tax treatment. These requirements include a maximum limit on the amount of premiums that can be paid relative to the death benefit, commonly referred to as the 7-pay limit. Adhering to these premium guidelines is crucial to maintain the tax advantage status of the policy. It's important to note that while Section 7702 provides tax benefits for life insurance policies, including IUL policies, it also includes specific requirements and limitations. The tax treatment of life insurance policies can be complex, and it's recommended to consult with a tax advisor or insurance professional who can provide personalized guidance based on your individual circumstances and the specific provisions of the tax code. Additionally, tax laws and regulations can change over time, so it's essential to stay updated on any revisions or amendments to Section 7702 or other relevant tax provisions. Remember, indexed universal life insurance can be a powerful financial tool, but it's essential to make informed decisions based on your unique circumstances. Working with a qualified financial advisor can provide valuable guidance throughout the process.